Let's get into a stock review on HIMS. Okay, so the ticker is HIMS. This is a company that currently gives medical services and doctor's appointments by like text or phone call or Zoom call to men and women. They mainly started out with men for things that maybe guys weren't so happy to go to talk to their doctor about. So topics like hair loss, ED, weight management, things like that, even depression and anxiety. There's a lot of people who just don't feel comfortable going to a doctor and talking in person, want to do that somewhat anonymously, so they make these appointments online. And HIMS has a service for that. And they also have the ability to prescribe medicines and actually deliver medicines through a prescription mail service. So they're doing very well as a company. This idea has kind of taken off, especially a lot with the younger generations who kind of like this idea of getting medical care through a messaging service rather than having to talk with a doctor. So that is who HIMS is. They're also really benefiting from the weight loss injections and drugs that are out there right now that are helping a lot of people with obesity and bringing down that obesity number pretty quickly in the United States. It's kind of interesting to watch. So they've made really great business design plans here, and they're starting to really benefit from that. A lot of what they are doing and why they are doing so much better is actually because of the weight loss drugs. There are just so many more men that are getting involved in that versus just women, which was sort of the past Ozempic / Mounjaro craze. It's kind of now moving over to men. They're directly marketing to men more. And a lot of these drugs are no longer just made under the name brand. You can get, not generics, but they call them compounded versions of these drugs. So that's why we're seeing a significant rise in this company. This 5-year chart is really interesting to me because it kind of shows the stock IPOing and going through this thing where there's this massive pump. Like the market gets excited about it, and then there's a pump, and then there's a dump. And a lot of times you don't see stocks recover from this dump for a long time. Like Robinhood is one of them. I just saw one. SoFi is one of them. Somebody came to my YouTube page and was saying that I'm wrong about SoFi because they've gained something like 89% this year. And I'm like, that's true. They have, but they have not. They just retraced to their IPO, and they haven't gone anywhere near their all-time high. That is not the case here of what we're seeing in HIMS. They're right next to their all-time high. So this becomes an interesting company to me because of that. Okay, so this 5-year chart is pretty awesome. It's up 132%. So we always want to look at the charts. And if the 5-year is not good, I stop there. I'm not interested. But this one's great, so I can keep going with my method here. So the 1 year is up, again, 229%. So if you had got in at any point here on this dip, you'd be happy, and your investment would have paid off. I'm just starting to get interested now as part of my system because I don't buy stocks on this 5-year chart. Like I don't buy in here. I wait for the stock to retrace to sort of like 3/4 of the way up, 75% retracement to the all-time high before I will buy. I am not a value investor. I don't try to buy low and hope for the stock to go up. I make sure that the stock is proving it to itself to me first that it can before I even get invested, and I make sure that that company is an industry dominator and is on trend or an industry leader. And HIMS is definitely the industry leader. I mean, they have a lot of TV commercials going. They're addressing like a void in the market that's being filled by them. And there's not that many competitors for them. There really aren't. So they've got a nice business model. Okay, so then the 3-year chart, just getting back to that, the charts here, it is up 43%. So this passes the first metric, which is this a monopoly or industry dominator on trend? It's definitely an industry dominator. It's definitely on trend. Are the 5-year, 1-year, and 3-month charts all up? Yes. And it's nearing its all-time high. Are the revenue and gross profit and financial statements up year over year? Well, let's find out. Let's click on that button here on Yahoo Finance for the financials. I might have to move my screen a little bit here to actually hit that button. Sorry, guys. We are having trouble. Move it over here. There we go. Move this back. Okay. So we have 148, 271, 526, 872, 1.2. Yeah, those are up. That looks beautiful. 109, 204, 408, 7411. 1 point. Yes, amazing. Now there's something I want to point out to you here, and that is that this stock is $22.95. Okay. That's not a lot. Okay. Anytime you buy a stock that is less than $100 a share, unless it is one of the mega cap stocks after they just split, you are buying a stock that the institutions aren't as interested in as those other stocks that are more than $100 a share. And you're wondering why. And the reason is because they trade options. And the premiums aren't as high on stocks like this, or it's just kind of more work to manage more contracts. So you need more and more contracts of this stock to make the same kind of money that you would trading something like an Amazon, because it's more expensive. Also, if you have more money and you are an institution, you tend to gravitate towards more expensive things. This is just true of human nature. We do that. We buy more expensive things when we have more money. I know that's going to sound odd for certain people out there to believe, but I promise you it's true. So when you invest in something like a HIMS, there's two things that I look at here. Is it below $100 a share? Yes. Okay. That means that if there's a pullback, the institutions will unload on this stock before they will other stocks. So it will drop faster than stocks that are more established and older and more name known. Okay. The other thing is that says that to me in this is that these numbers aren't big. Okay. If you go and compare these to like what the gross profit and gross revenue of an Apple or an Amazon or something like that is, it blows this out of the water. It's just not nearly as big as of a company. So again, when there's a pullback in the market, the institutions will dump like lesser known names and they will stick with the mega caps and the huge stocks. So I understand that some of you want to trade options and you don't have $15,000 to trade options with. You have $2,000 or $3,000. And HIMS might be the best you can do with your money. And right now this looks great. I'm not saying there's anything wrong with that. I'm just saying if you have like $1 million account, I don't know if that you'd spend your time here. Okay. There might be better places that I would spend my time. That being said, I am trading HIMS a little bit here and there. So, there you go. I'm being honest about it. Okay. Do institutions love this stock? Well, they are pushing the stock up. So I would say right now they like it, but I do think it's subject to more pullbacks because I don't think they'll love it as much if the market goes south, like in 2025 at some point. And in 2025 at some point, we might hit some issues with the deficit. You'll probably see stocks like this drop faster and harder than those known names. That's just been my experience trading these years. I'm not saying it because I am crapping on this stock. I'm saying it because I have experience in the market that tells me such things. Okay, and then does it have a dividend? No. So that is another reason it could experience more pullbacks than stocks that do have a dividend. There is no ex-dividend date here or forward dividend and yield. That's where you'd find that information. So HIMS, it's a yes for me to buy and hope it grows. It's a yes for me to options trade with. Do I feel like I have more conviction in other stocks? Absolutely. But for people who have maybe growing accounts or want to get started on options and don't want to put a lot of money on the table to learn, this could be a good one to learn from. So that's why I'm bringing it to you.